This is Damon Stevens with Finwell Builder. Today is Thursday, September 15th, 2022. And this is stock market update for our trades of the day. And boy, what a day it was. It was a little bit shaky today. Up and down, back and forth. Day started out looking good, came back, pulled back, went back up for a nice little run and second test, and then dumped at the end of the day. And then, boy, after hours, we had a bomb drop. So, does this trigger possibly a crash here in the near future? Definitely, we have a lot of triggers out there that we need to discuss. And this is going to be a little bit longer video than normal, but there's some critical things to cover in here. So let's get right into it. All right, looking at the market today, Dow Jones closed down 0.56%, Nasdaq down 1.43%, and S&P 500 down 1.13%. You see across our map here, pretty red across the board. We had a few, key stocks that were kind of out there, some outliers out here, but overall, market was down. Tesla was nice and strong just right till the end of the day. It just could not hold it, but still at critical support. So it's at a good place right now compared to some of the other stocks right now. Let's get into kind of what's going on in the market here and some of the dangers out there. But one of the things I did want to cover here is HKD. We talked about this the other day. How this thing just rocketed up from $45, went up today to a high of 382. Now, we talked about this the other night when it rocketed up the other day. Said, hey, don't chase this, right? Because here's the 14th. So this was yesterday. 45 up to yesterday up to this 288, then a pull back, and then a run up to, like we said, to 382.55. I said I try not to chase this one, but if you want to, I guess you can do whatever you want. But this one, high risk. Heard about people who took this and was well rewarded. Heard others who kind of held it too long and took a little bit of a hit today as it pulled all the way back down. It's down here, low down here is 117 after hours. It pulled back up a little bit, but 117 from 352. So this is one of those stocks again that we talked about several times that with these parabolic moves, they can be very rewarding. But somebody's on the other side of that trade, and a lot of people lose money too, and you don't know when that's going to fall out. This was a stock that was at 2,300, so just be careful out there. It's not a safe long-term play typically to chase these kind of stocks, but you know what? There are opportunities, and if you're on the right side, great, you're rewarded. If not, just prepare to lose everything. So here's where the ball dropped. So FedEx after hours came out and had some earning issues that they announced. And as soon as they did that, they tanked from 196 down to 171 currently. So they dropped $25 in the matter of minutes and off of earnings warnings. And you can see where they kind of came in. They have this big area of support right here around this 168, 167. This was also a little breakout right here. So you can see that they had strength to at least stop the stock from falling further. But could they fall further? Yeah, they could, but at least they hit a support level. So we can see if there's a little bit of a recovery on this. A lot of it's going to depend on how the market kind of reacts to the data tomorrow and also what the overall market does. But there's out there that could possibly trip us into a downfall on the market. And make sure that you're protecting your long-term portfolio. And if you're a day trader as well, that you're making sure you're on the right side of the trade by following the price action and not just guessing, but looking at where the prices are going based on what's out there in the news. And if you're not comfortable with it, just stay on the sideline with cash. I mean, cash is a good place to be, especially if we do come to lower lows, because that means you're able to get stocks at a lower price. But here's if you're not staying up with the news, stay with CNN, you go check them out. They talked about typically September's the worst historically month in the year. So just keep that in mind as well overall. Typically we do it is the worst performing. But here's on CNBC, you can go check that out on their site as well if you want to read all these details. But basically, the FedEx CEO after hours said he expects the economy to enter a worldwide recession. Talked about all the challenges they're having on shipments and other guides and their earnings, and that caused a downfall. And it rolled over right to UPS, of course. UPS kind of closed out here, You know, they're closed down. They were at 191. They closed down at 187, but as soon as they dropped down, clear down to 174. Currently around 175. So they dropped another $10 themselves down to where they were back in July. Now this line right here is where they found support. But if it continues to be bad, or we start to have a slide off, the next area of support would be 169 for UPS. But UPS getting hit again on that news that was released from FedEx. Also, we had this last week here, China said that they had locked down 65 million people due to COVID. So COVID restrictions were shutting down. And you know what that does? Factories and a lot of the goods that actually come over to the United States and others in the world. So again, another impact. Now the thing that that's positive, at least on China right now, is at least today they announced that one of their cities that were on lockdown is exiting. Just after a week of being in full lockdown. So at least the reaction, China's reacting very quickly, hopefully to be able to at least open things back up, and that way they can keep their economy moving and their world economy moving in there. But these are all things you can go out there. This is Yahoo News. There's a lot of news out there, and it's good to keep aware of these things because any one of these could trigger the market to start crashing. And so just be aware of that, of what's going on out in the world. Also, here's another one. This is on CNN Business, so you can go out there and check out their site and read all the details on their news. But here's a freight train talking about striking. Now, I think Biden did something to try to help remedy that today. But again, another risk. What happens if the freight shuts down and also truckers strike? And bring everything to a halt. And so there's a lot of issues, lots of concerns, lots of things going on, a lot of moving parts right now in the economy. Any one of those could trigger, a sell-off. So just be careful on that. We are more in a bear market. We're having these nice little rallies we'll talk about as we get into the charts. But any of these little things keep popping up, and enough of them pop up here, we definitely can trigger it. We're talking about news and what else is going on. They could also be true, but just kind of try to make you aware. Here's the thing also, Market Watch, that's where, I look, to see what's coming out here. So on Friday, beyond, consumer sentiment index, which I'm not as concerned about, is quad witching hour, which means all the options, people who are long or short on the market through contracts called options, all come due tomorrow on Friday, which means they all expire. So everybody's got to either get into new contracts if they're rolling over, and they've got to, and this happens only once a quarter, and it happens tomorrow. So all those contracts expire, either worthless for people, or they've got to roll them, or they got to do something with them. And I'll show you here in a minute, but there's a lot of people that shorted this market and expected a lot lower numbers on the market currently that we are not at, which means they're going to lose money. Hedge funds that have bought all these options could possibly lose money. So they use them as a hedge. It was called a hedge against it. So there's a few things that could happen tomorrow. One, we could get a little bit of a dump, which we were having already in the after hours. And then basically a big, huge rally because everybody's having to buy up the market to cover their shorts that are coming due tomorrow that expire worthless. And that could cause a big pump. Or if we have no buyers in, the market could just slump down, and any one of these triggers could possibly force us to start dumping in the market. So you got to be prepared for both. And here's what I'm talking about. So this chart right here is showing right now in 2022, institutions, have put protection. So they're shorting the market with these put contracts. And this is the highest level in history, at least since 2000. So look at this level of people shorting the market. But look what the market keeps doing, right? Market pulled back here. Right, it had this little rally, had another tiny rally. But the market's trying to rally up here with all these people. They're going to be locked into these losing trades. So here's a SPY. This is S&P 500. Here's this is the expiration for tomorrow. And you see all these in red are all the people shorting the market. So these people short the market expecting to be below 400, below 380, below 370. And so that's where if these guys, if the market's higher than these, then they're going to be worthless. And they're going to either have to buy stock to try to counter this, or just let these expire and basically the market takes the money back. So that's the thing to be aware of what's going on here. And you can see 1.6 percent, 1.6 to 1 institutions or people are shorting the market versus long. So that's a concern, especially coming in tomorrow because this is a quarterly expiration. So we'll see what happens. But tomorrow is probably a very critical day right now to just see what's going to happen in the market. And there's so many triggers out there right now. Just something to be aware of. The other thing coming up on September 21st is Fed hike. So I've heard, 0.75%. I've heard 1%. Uh, you know, Jerome says he's going to be aggressive and trying to get us in line. But here's my question. Right now, after seeing all the news that's coming out here, 0.75 I think is going to be a stretch for this increase. Now, I'm can't tell you the future. I can't tell you what's right, what's not. I don't make those decisions. But enough bad news out there, or enough risk coming to the market, enough risk coming to our economy. I think the Feds are going to be careful on that day, and so not an easy job that they're in. But the Fed's got to make that choice and tell us what the interest rates are going to go, and the banks are going to have to make those decisions as well. So just expect some pain, but we also got to be careful and watch the news and see what's coming out. And you don't want to necessarily trade the news, but you got to be aware of the news and then trade how the stocks react to the news. But don't just guess on which direction it's going to throw it, because anything could change here. And we saw that with these little rallies we had. And here's another important chart that we're going to talk about right now. This is S&P 500 stocks above the 50-day moving average. So usually when stocks are above the 50-day, they're going more in a bullish momentum, and that's good. That means good longs. And when it's down, when they're below the 50-day, usually that means they are really coming down here. And you can see, in August we had this nice rally for a few weeks, and really took us up to where 92% of companies were above the 50-day moving average. So which is crazy, right? Because if you look at history, typically we have a pullback after 71%, 76%, 78%, 75, 69. We have a pullback in the market. So when we hit 90, 92, I was like, okay, this is another time for a pullback. I mean, we're way overdue. This is a huge gapping up here in a little island that we have up here. Sure enough, pull back. Here's where we pulled back. Then we got another mini rally. We came back up here right where we're at, 69, right here where we pulled back here in April. Hit that mark, boom. Now we're back down here at the support level. Now we're right here on this line right here, where we're about close to 30% of companies are above the 50 days. So 70% now are below the 50-day moving average. So this line is critical for a bounce. If we don't, we maybe come back down to these lows. And now these lows, you have almost basically nobody over the 50-day, which means you are definitely showing 100% bear. And we're right now looking pretty strong. So does this hold and we can bounce back out of here? It's possible, but you see that this rally may continue to shrink down. We may come back. If we do pull back up here, we may only pull back up here to maybe 48. And then do we pull back up here to 31 and then drop out, or do we just fall through right now? That's to be seen here, but you can see we had a little bit of consolidation here. Not that that's going to predict where we're at now, but just something to be aware of. I mean, I think this chart, I watched this, I think it's just a good overall indicator of how healthy the market really is. And if you're not subscribed, you definitely subscribe to our channel, FinWealth Live on our YouTube channel. We also have FinWealth Live out on Facebook as well. So check us out, watch our videos. Hopefully they're helpful for you. We try to put some education in there. We also have, if you go out to our website, finwealthlive.com, we have a website out there where we have a free Discord and a chat out there, and we post watch lists out there so that people can see what we're trading, what we're looking at, We talk about, what levels we're getting in, where we're getting out, where we're taking profits. And so if you're interested in at all and looking at what we're doing, definitely check that out. Also, we have a membership. If you join our membership, things that we offer, there's live trading, some training courses. We have actually a master class out there, and we have a core. One of the groups out there covers about 16 different training techniques and methods. And so, if you're looking for something new, some different way of trading, or maybe you're new to trading, trying to figure out, what's your style of trading that you prefer, definitely, join us, take the training courses, figure it out. And if you need some help, obviously we're there along the way. We have group training, and we also offer one-on-ones, including, one thing we did recently, looked at some of the computer setups that some of the members have, and help them to set up their computer so that they can trade better, so they can understand the market better, what's going on. And so definitely would love to have you join us and help you out as a trader. We want you to be successful. So let's get into some charts now. This is Tesla on the daily chart. Again, we talk about this every day, but we have two trend lines. One is based off the main trend line. The other one's off the minor. And off this minor here, this pivot point through this pivot point, you can see that we spiked it up kind of right into this middle, this range here between our major and our minor. And we pulled back here right at the base. So Tesla is looking really strong. It's done really, really well in relation to the rest of the market because it's continued to rally. So if it holds here, we could possibly run back up to this major line. If not, the market starts to tank, though, we may come back into this wedge that we were in. It looks like going to break out, but we very well could break back in this wedge and chop down or come down here to, one of these support levels down here. So it's something that we're watching for tomorrow as we look for how the market's going to react to all this news, and also the expiration of all the options, quarterly, monthly, weekly, daily, all expiring tomorrow. So Netflix had a really strong day today too. I mean, early morning, it hit the scanner right away. That we're having a great day with Netflix. So hopefully some of you caught that move. I had it on we had it out on our chart on our live streaming all day long, so people could see what levels to try to get into and take a piece of this. Now it did pull back with the rest of the market at the end of the day, but from the morning on, great rally on Netflix. It's Chipotle pulled back here. Again, we're under the support line. We talked about this, kind of flat, but we're holding on these highs right here. Looking for to try to get back over this, but really Chipotle's a little extended. So we talked about this retracement. Maybe retracing back here, maybe down towards, at some point maybe this 20-day moving average around 1670. So that's a possibility, and then hopefully we'll hold there and bounce. If the market though does show any type of strong weakness and sell off, we may start to see Chipotle pull back here, even though it's been a really strong stock the last few weeks. Amazon, looking at Amazon here, you see that we pulled back here. We're kind of in this little zone here, and so we may chop in this little zone until we get some good direction on the market and which way it's going to go. So I've been trading Amazon lately just because it's been kind of flat, not a real good mover, at least for us. Apple just was a beast and came up here, though. It had kind of came back, kind of rallied up here, kind of broke out of that downward trend line, and now it's back here down to support. It's right now at a critical level. Because it's right here that you can see where this double bottom was. Here's the neckline, what they call a neckline, and that's typically where you get your breakout, and that's exactly what happened. We're right here at that neckline. So if we break down below 150, we very well could start to come down here and test some of these lows here at around 143 to 140 area, or even lower, especially if the market starts to fall off. So Apple's been a real strong stock, but showing some weakness and right down at critical support right now. Microsoft gave us a great run as well. And then it broke this neckline here of this triple bottom. And right now it's at here towards the bottom. I mean, it just kind of lost all that momentum. And that could happen to Apple as well. So just, telling you, just be careful. If we break below, we kind of spiked through it. We ended up on support where we're back here, back in July and May. But if we break this, we may be putting new lows in for Microsoft. So something to be aware of. Nvidia too, which just love this stock for months and months, and it's been a great stock for years, but just getting pummeled right now. And now we're down here to another new low today. This thing just keeps going down here. Thought it was going to go down here to, it almost got down to 123. Looking for it to break to 123 and then down to 119 probably. I think this thing's probably got some more room to the downside right now. Just, semiconductors and especially NVIDIA just been nailed, especially with the restrictions to China and other areas. Looking here, looking at the 10-year yield and 2-year, it gives you a good indicator as far as if money's flowing out into bonds and out of the stocks. And that's kind of what's happened with the 10-year yield. It's been kind of flat, but the 2-year is just killing it. It is just skyrocketing here, and it's just some new highs here. It just continues to rocket up here. So if you're in here, you're having a great day. And this is the kind of safe haven. If the economy is bad and things are tanking, this is where institutions go to put their money. And so if money's flowing into here and we're making new highs, that means more money's pumping in. And that means that's pumping into a safety area. And if it's pumping into the safety area in bonds, watch out below on the market. And this is now at a new high here, right at our upper bands here. And if it continues, get ready on the market. That's why I'm trying to put the warning out there, not to just sell everything. I'm not telling you what to do with your money, just telling you just to be careful and make some conscious decisions on how you're going to mitigate your own risk, and then also take advantage of opportunities as well. The dollar, luckily, is consolidating. This thing was just this huge. Look at this breakup candle, just huge run up when we had that pull down this week. But it's holding up here in this little range, kind of above this high that we had back here in July. So we'll just see if we consolidate here. But boy, the dollar, money flowing into dollar means money flowing out of the market and out of gold. And of course, you can see gold drop down below, put it in a new low here. So gold is just really hurting here. And will continue to as the dollar strengthens, bonds strengthen, and the market gets weak. So not good days for book gold right now, unless you're shorting it. The VIX, so the VIX was kind of steady, kind of ended flat. So if we're ending flat and not moving much, the market, didn't move much either, but it's definitely down in a downward slope, even though the VIX kind of is sitting here flat right in the middle. So we'll see what happens, but if the VIX can pull down, the market can rally back up. But if it doesn't, if it breaks up here over this 2750 area, the market's coming down. On the weekly, you can see we had this trend line here. The VIX is sitting right on it. So very well, it spiked it today, and then it came back down, and it's sitting right on the line. So we'll see what happens, but keep an eye on the VIX. It usually gives you a good indication as far as what the market's going to be for the day. So the SPY, we broke this trend line today, and we're below it, and we're almost right down here to these these candles right here. So about 4 candles on the daily. So we're right down here testing this. So if we break this line, that's what I'm talking about here. Breaking this line is where we had this little neckline for this double bottom. This actually double bottom. It looks like almost like a triple, but this neckline right here, we're right there. If we break this, boom, we're coming down and possibly down to at least 370, if not maybe down to this lows at 362. So tomorrow could be a decision day, or it could go flat. As you can see here, when we went flat for a little bit before bouncing off. So we could still bounce off this level, but right now, just we're at decision point. On a weekly, talked about this in our videos as well at night. We didn't want to get below these candles, and today we closed below the candles the last 2 weeks. So now that we did, it's easier for this to now break to the downside, and that's where I'm a little concerned. So we're sitting at 390. 390 is the line in the sand. We got a little bit below it after hours, especially after FedEx had their announcement. So we're kind of like down below critical support right now. So if we get maybe a little fallout tonight and a little bounce, hopefully tomorrow, maybe we can rally this up. But you know, if we do, we could rally up here back up to 400 real quick, especially if we get a squeeze going on where people are having to cover. So anything goes tomorrow, either break down or break down and then a break up. So just be prepared for both. Triple Qs right down here as well. So here's the lows. This was a resistance area. It became support. We're right here, right close to breaking. So 290 for triple Qs, and we're right there. After hours, we're below it. So tomorrow's going to be a critical day for the bulls to come back in, or the bears may suck us down to new lows. Semiconductors broke the trend line and broke our support line. So and then after hours, we're looking at being down here. So if we get below this $200, very well could start to come back and retest these lows. IWM, not as bad. It's still within this little candle here. If we breach this candle here, this 180.55, we have this next candle for support. So there's a little support for the Russell 2000 for the small caps, but not much before we hit this line. But at least the small caps are showing some strength here to hold up. Financials, the XLF, so financial stocks, they close within this candle as well, so they're showing a little bit of strength. And this is kind of where we have a little bit of hope. Triple Qs and SPY and NASDAQ, they're the weakest. But the others are showing some strength here, at least trying to hold up. So maybe either they can pull them up, or if not, these guys might get dragged down with the SPY. Looking at Bitcoin, Bitcoin came up, tagged this support line we talked about. That was resistance. It was resistance here. It pulled back, and with the market pulling back, Bitcoin's going to react to that as well. So Bitcoin may come down here back and test this $17,000 level, especially if the market does come down hard tomorrow. So right now, I'm not expecting a good weekend for Bitcoin. So we'll see. It could change if we get all of a sudden a rally for some reason tomorrow. But right now, Bitcoin looking weak. Same with Ethereum. It broke out of our triangle here, down towards these lows. So 1422 needs to be support. If not, we're coming down here, maybe down to this level, 1281 down here. So Ethereum, for being a strong stock and thought we were going to break out, we kind of broke a little bit above, and we came back, check in, and actually failed and broke all the way through back to the bottom side. So have a little bit of support here, not a whole lot. And then Luna Classic, if you're in this one, we talked about taking profits along the way. Had this nice rocket ride, but boy, it's coming back here, and it broke the 20, and now it's come down to the 50 here probably, and should hopefully find support here at 22. So just important to take profits for a reason on stocks, and to hold some of that cash on the side so that you can trade later on, and that you're not giving all your profits away or your own money. So try not to chase these too much here. Not financial advice, but just try to be careful out there. We have a lot of moving parts. Any number of triggers could send us more in a downward direction than probably a market bounce. And even if we get a little bit of bounce, we are in a bear market right now. Probably will be for a little while here. So any type of bounce to the upside probably met at some point and pushes right back down to the downside. So just be careful out there. Tomorrow's a critical day. It's really important. So stay tuned. Join our channel. Continue to watch our videos, and we'll try to bring you as many updates as we can. Not trying to put fear into anybody, rather than just information, so that you can make decisions and informed decisions on what you want to do with your investments, and making sure that you're making the best choices out there. Everybody, have a great night. We'll, again, it's Friday tomorrow, so we won't be doing a video tomorrow night, but we will be doing a video over the weekend, and also on Sunday. We'll do a prep video on Sunday to get you all ready for Monday and let you know kind of what we're looking for as we start out the next week. Everybody have a great weekend if we don't hear from you. And again, join us join us in our chat, join us in our, our daily watch list. They're absolutely free, and we believe that they'll bring benefit to you. Everybody have a great weekend. Have a great night, and good luck trading tomorrow. Can you talk now? Question mark.